Hello, good afternoon, fellow traders. Welcome to our channel weekly forecast with Clinton and myself, Josh. Last week, we started bringing you the weekly forecast again because we've been quiet for some time now. But this year, we plan to lock in and we are going to be consistent. We're never going to miss any weekly forecast. So we encourage all traders to be engaging in the channel. If there is a particular market you want us to look at, just comment under. Example, let's say if you want us to look at the German DAX, you just comment, like, and comment under. Can you break down German DAX for us? And then our next video will be coming in. Also, Clinton's phone number and my phone number will be under the video plus email. Feel free to reach us if you are looking for mentorship. Our mentorship is nothing like it's out there. Okay, so we have time for you one-on-one. So without further ado, let's go to our chat. Okay, so last week we spoke about this chart. Okay, so this is the weekly chart here. This is last week chart here. Okay, so let me try to. This was last week weekly high, and then we have the weekly low here. Okay, so yeah. So let's come to the 4-hour chart, for instance. Let's see. We spoke about this chart here last week, okay, and we talk about price, looking for price coming down around this area, 165 area here. Okay, then we'll be looking for this area here. We spoke about this area right here. Now when the market open, wait for liquidity sweep around this area here, then look for the market coming down here. Okay, then if our price is unable to take out if price is unable to take out the lows here, you are going to look for confirmation for a reverse buy, and price actually play out the same as we wanted. When the market opened, price went to our entry points, and then we were able to execute the sells for those of you who trade this pair. And then you can see we have some other block here. Price actually even didn't come there. We just came in right here. We had some liquidity generated, and if you move to your smaller time frame, you have a confirmation of a buy entry also here. So you could have gotten the sell, the buy, and this is on, I think, on the Friday after the non-farm payroll. Okay, then you can see you have another sell trade entry over here. Okay, so you can see price, you have a swing high here, and then you have a swing low here, and you have a swing high, and you have a failure. Okay, so we have, you can actually say this is a structure here which was broken liquidity sweep. Okay, and liquidity sweep to your left as well, and then you have that retracement here. So coming in next week, what I would like to see is if I move to the 2-hour charts, let's see what I can see clearly here. Okay, we have this relative lows here, which is serving also as a liquidity point here. All I want to see next week is I want a candle closure. Okay, or if I want to look into a smaller time frame, I want to see if I can see. You can see on the smaller time frame, you have a little bit of consolidation. So based on the 4-hour charts, okay, based on the 4-hour chart, you can see structure was broken here, okay. So what I want to see is that if price close below 1.33905, then price try to retest, okay, and the failure, then I'll look for a confirmation. Then am I going to target 1.33 180? And if I want to go extreme, if price is aggressive, then my second target is going to be this liquidity, okay, this liquidity here, liquidity area here. So that will be my second entry. You can look at it also on the daily time frame, and let's see what we have on the daily time frame is telling us. So based on the daily time frame, you can also see that it's showing us a key point. We have some order block here, okay. We have some order block around this area, 1.33690, which is serving us close to our TP1. That is, if we have a candle closure around this lows, 1.33885, okay, then we have a retest and we have a failure, okay. If this doesn't hold, then if we have a candle closure above this level, then you can look for a buy and target. Your first target should be 1.34. And the reason is that, as you can see, we have a daily fair value gap here, okay? There is the wick here and there is the wick here. So based on this also, the two scenarios is what I've shown you. Either this doesn't respect this fair value gap, fails to be respected and price comes here, and there is a very good possibility that this daily fair value gap may not be respected. And the reason is because if you look at price falling, okay, this sell-off here or correction, price was dropping aggressively. And normally when price is aggressive like this, as you can see to your left, most of the time, the first fair value gap here doesn't respect, and is going to respect the second fair value gap. Okay, so you can see below the second target that I've told you, there is a second fair value gap there, okay, between 1.332 and a little bit above the first fair value gap, which is around 1.334. So there is a high probability that you might have a continuation of a sell, as I've explained to you how it's going to happen. And price might actually maybe reverse from either the first TP or after sweeping the liquidity of 1.32865, then continue on a little pullback deeper. Okay, the deeper the better. Then we can actually start coming up, price push up again, and we might actually be pushing up the rest of the week or even maybe into next week. So I don't know how you want to play it, but don't be too impulsive to enter the market. Wait for your entry and confirmation before you go in. So last week, probably this pair, if you follow the play as we spoke about, price actually delivered more than 300 pips on this. So let's move to the next market and see what we can do. Okay, this is gold. Anyway, just to remind you that I see a bear market coming this year based on my seasonal analysis and stuff like that. Remember, okay, let's go into gold and see. We had pretty good indication of what the gold market was going to do last week, and I think we spoke about it, and I did a breakout here for you. Okay, so I spoke about when gold, you should buy gold around this level. That was last week. Okay. I said when the market opens, we will be looking to buy gold around this level, 4331, or a little below, or 4340. And price actually did the same. So either you went in around 4335, or if you choose to go to the smaller time frame, let's see. Yeah, if you choose to go to the smaller time frame, let's see what you can see. Okay, yeah. So either you can go in around that level, or a little bit below. And the reason why this happened was that, look at it here. We have a 1 hour fair value gap here, which price pulls back to the other block. So actually, the reversal started on Friday, okay? Because if the previous video I didn't do, I spoke about this area that I will want price to come back and take out this 420 level, and before I will be looking for buying. Price gave us that low of that 4310. So the reversal actually started. So we knew that price was going to continue. Okay, so you can know the future if you do your analysis and you follow seasonal trends. So we knew that price was going to go this level. So I said, as soon as the market opened, you don't even have to wait. Look for a buy around 4331. So between 4331 and 440, if you are able to enter, I spoke about, then you can target 44 and then 4500 to the stream. And price, I think we have been almost 2,000, 8,900 pips. Okay, so we have all this area here. Price come here, and then we have that correction. Okay, we have that correction here. If you can watch this correction area here, there was an order block and a fair value gap around this area. If you look to your left, okay, over here we have that 1 hour fair value gap and that correction there. So price actually respected it and moved back again. And then we have that non-farm payroll on Friday. Price grabbed all this liquidity here, which was generating. Price drop all this liquidity here, and now we have this big five. Okay, yeah, we have all that impulsive move over there. Okay, so what is next? In the long term, I think probably we're going to see a 5,000 gold this year, but before then, you just have to be patient here. Okay, so I believe that when the market opens, just wait, because there is going to be probably some correction. Okay, price might be show some correction, probably maybe below 500. Okay, I would like to see if price move back to 4482, either this liquidity or this the liquidity zone, or what I would like to see is I would like to see a candle closure around this 518. Remember, previous high or all-time high for gold is around 4550. Okay, the market maker can actually decide to push the market up at the open to 4550, and then you're going to have that deeper pullback. Okay, before we resume any type of uptrend again, or the market opens. Okay, we'll have a liquidity sweep around this high here, and then price will make some correction back into these levels or below these levels before you have another buy trade for price to keep going higher. So if we go to the 4 hour chart, so you can see this is what I'm saying. we could have price coming back to this high here for 447, because remember, it's a supply zone there. So price could push quickly back up, mitigate that supply zone, then come back for a correction deeper into the 4480 inside before price is going to continue on its uptrend, okay? And you might see probably similar thing if we move onto our daily, okay? So this is all-time high here, and you can see we have an equal high, which is a liquidity waiting to be taken. So there are 2 or 3 scenarios which could be played in gold, and I've explained my take to you. Remember, this is not a financial advice. It's for educational purpose only, and I'm only, myself and my partner Clinton, we are only sharing our knowledge. It's for educational purpose only. You might not use this as a financial advice for the basis of your trading, because we will not be liable for your losses. So you have to do your due diligence before you take any trade. So having said that, on our daily chart here, this is what we see. You have a liquidity sitting up here. So you might expect that price will come back and take this liquidity before we start making some move down, okay? Then come to a key zone area for confirmation before we start to move going up, okay? So gold, the chart has been pretty much clear. This is the weekly chart, so you can see here when that structure was broken, gold has never looked back from 3-4 based on the weekly chart. Price moved from 3-4 and we've moved all the way, and we had a small correction here, and this is the continuation, okay? So you can see even on the weekly chart on gold, you have some strong liquidity sitting at the all-time high, okay? So we all expect price to come and sweep that, then probably make some correction before we might start going up. Okay, so let's move to the next market and let's see. This is the indices. So this is the Nasdaq 100 here. So that has been some impressive move. You can see we have some correction here, a big deeper pullback correction to a key zone, liquidity generated, then we have some upwards move, and the year has started. So basically, based on this 4-hour chart, what I'm expecting, because we have some supply zone here, I expect price to actually have some kind of liquidity generated. Then we have come pullback. Okay, we have this supply zone, demand area here, fair value gap, which was mitigated by this candle. So you can see Friday liquidity generated, swept, and then price push up. And then we have this 4-hour fair value gap that has also been created. So I expect some sellers to come into the markets, corrections around this area, 25,665, or in the middle range of the fair value gap, price to actually drop back in before we start moving up. So I mean, Nasdaq or the US 100 is a pretty straightforward. So yeah, so that's what it is. So you have like the formation that actually is trying to form here is like the cap and the handle, okay? Or yeah, so you have this here, so you want that next one to come down, or someone might say maybe it could also form a double or quadruple top, whichever way. We need corrections to come down. So I will probably wait for the corrections to come and wait for a buy signal. So I'm actually not going to waste a lot of time on this market. So because the 1 hour, 4 hour is all telling us the same. We are looking for some corrections before we look for buy to continue on to push up. Okay. So let's look at last week. I think we spoke about pound JPY. So I'll bring that up because that also did a very good. Yeah. So this is the euro pound. Okay. Don't forget, I forgot to tell you, gold and oil prices are also affected by pound USD. Okay, and the euro USD. These are the big currencies. So we have something that maybe next time I'll try and share with you what we call intermarket analysis. Okay, how some markets affects the other, because especially the commodity markets, commodities like gold and oil, palladium, silver, and stuff like that. These are big assets, and some other markets like the cable, which I've mentioned again, the XY and stuff like that. This normally affects the prices of gold, whether it's going up or down. So that's why we do intermarket analysis. So maybe one of these days we will share this with you. So as you can see, Euro USD is approaching a very key zone here. Okay, liquidity area here. So the first thing which actually has happened is that price swap liquidity. Okay, and actually we have rejection quickly on the 4-hour chart. So I will wait for price to attempt that liquidity area again. And if we have another rejection, I'm going to try to look for buys on this area, and then my target is going to be this area, okay, for next week. So this is my personal view, what I think that price is going to do based on the 4-hour charts, okay. If you look at the daily chart also, you can see this is the key zone which I'm talking about. So the worst scenario is that maybe when the market open, price will come back again and maybe take out, try to sweep the liquidity again, this high again, to create an equal low or close a little below, and then there will be a rejection. And then I am going to look for a buy there, okay? Because if you look at this candle, you can see this candle doesn't have a wick. And if this candle doesn't have a wick, so we don't actually have fair value gap for sales here based on this 1, 2, 3 candles. So what I'm expecting is that price will be attracted there. So that is why I put the TP there. So when I get a buy confirmation on Euro USD, that is where I'm going to target for my first TP, okay? So you can actually you know your point of interest, which I have shared for you, okay? This is your point of interest here. So you wait for your buy confirmation. And when you have your buy confirmation, then you can target that area, okay? That is for long term, but if you are a day trader, then these are target areas you can actually target. You can make yourself into like a TP1, okay? And then, okay, somewhere here is going to be your TP2, and somewhere here is going to be your TP3, okay? Then your final TP is going to be there, because you can see if you move to this 30 minutes time frame, we have some supply, sell side liquidity and some supply zone sitting here. When what do? Price normally rejects when they come there. But I'm going to take this trade, I'm taking it on the 4-hour chart. So then I can hold on to that area which I explained to you on the daily chart. Okay, because I'm taking that 4-hour chart, and then I'll leave it until price comes to that area here, okay, which is around 1.167, okay. So extreme is here, okay, where we have some high there, liquidity is there, and we have also some extreme supply here. But we're not talking about those long term yet. We are just looking at what is likely to happen next week. So pay attention, don't rush into the market. Let the market comes to you. Get your buy confirmation, apply proper risk management, then you can actually enjoy the market, enjoy your profits, and reduce your risk possible as little as you can. Okay, so this was our market for last week on the pound yen. We had the 212 here, which is the last week high, and we have about 209, 208 here as a low. It was a little bit below that. Okay, and we have this weekly fair value gap, which has not been mitigated. And look, we have a extreme order block here. We have this 201 here, which has no wick. So remember, price will eventually be attracted to this 201 in the long term. Okay, and even here 198. So bear in mind when price hit there, you know that I told you in advance. Okay, so let's go in. So I think last week we spoke about this market as well, and I told you that when the market opened, what we want to see, I think somewhere here, was price moving up, coming back to this supply here. Okay, this supply area here, because this wasn't there, and because of this supply zone, I was telling you, wait for price to come to maybe 211, then we look for a sell from there, and that's exactly what happened. So we came back to 210, and then I said if price doesn't close below, that is if we don't have a candle closure, or and so this is what I mean by a candle closure. You see, a candle closes above our point of interest here for a continuation uptrend, and it's the same thing I explained. If candle doesn't close here, that's your TP1, then you wait for a reversal buy and target 211 or 211.5, and price actually even did more than that. Price came to, so you can catch the sell and you can catch the buy, or you can catch one of them, whichever you want. Price came back, generated some supply zone there, and you can see breaker block here for your entry for another resell again. So if you know how to read the market, that was pretty solid. So you can have your entry or 211.75, and your TP will be a little bit above 2.12, and then price delivered over 100 pips again. Okay, more than probably 150 pips, and liquidity that was generated was swept, and you have your entry buy again. Okay, and your stop loss was below 210.2. So you can put 210.1 or 2.0, and price came back again to that supply zone again, 212. So if you know how to read the market, you could have get your sell, because I gave you, and you have the buy again, and you have another sell, and you have another buy, or at least you could have got the two buys or the two sells. So price actually did everything that we broke down for you, and it delivered it perfectly. So what do we see going forward? Well, based on the daily charts here, okay, we wouldn't expect any type of crazy movement, because here we have still the daily still is a sell zone here, okay, supply zone here. Only time I will be looking for a continuation uptrend is if price close above this high here, 212.8, okay, then I can target probably 100 or 200 pips. But based on this daily setup, what I would like to see is that price will probably pull back again, okay, back into this demand zone 210, okay, because this is still a supply zone. And the only way I will look for a buy here, as I've told you, if there is a candle closure around 212, a retest and a failure, then I will look for price to go to 213. Other than that, when the market open, I will look for some sort of liquidity generation around here, probably maybe price coming here and also taking out this liquidity, and then we're going to come down either to this lows, or maybe candle closing between these lows, and then we come in, because if you look here, all this is liquidity, okay, waiting to be taken. Okay, and also remember we have deep fair value gap and order block here around this area here. So that will be, I'm not going to actually rush. Okay, that's if I trade this market, I only trade gold. So I'm not going to rush on the pound JPY. If I trade that market, I would like to see how price reacts between 211 and 1201. Okay, because if you look at here to here, there is not big of a range there for you to actually risk anything. So I would rather prefer that price gives me a sell from that 211 to 210. That's 100 pip or more than 100 pip range. So that is a risk worth taking than trying to go for 30 or 40 pips. I only want price to close above here, then come and retest that 212 there. Then another, that's if I'm using the 4-hour chart, another rejection and a closure like that before I will look for a buy to go up, and my stop loss is just going to be maybe 211.95 or 211.85. Other than that, the most likely scenario here where I see a market doing is a market coming down to retest these lows again, or probably even close below and keep pushing low. So remember, if price doesn't meet your criteria or your setup, you don't actually take any trade and try to lose your money. Okay, the market will always going to be there, so it's always for you to be patient, even if it's 2 trades you get in a week, and then they are quality setups and they are giving you money. That's better. Consistency is key to making money in the market. There is no point trying to make huge money then losing them again. Okay, so have a plan, always refine your strategy, and always be calm in the market and test your psychology. Journal all your trades. Know that this is a long-term game. It's not a short-term game for you, and keep learning and seeking excellence. Associate yourself with people who have the same dreams as you, people who wants to better themselves, people who are positive, people who are willing to push you to where you want to go. Okay, that's all the market is. And always, when it comes to analysis, keep it simple. Don't complicate anything. If you look at this chart here, you can actually see that this trend has been very clean. Okay, this trend has been very clean, unless when we got to between 210 and 211 we were caught up in a range. Apart from that, it has been a very clean trend. So know what you trade and know what works for you. I will see you after next week, and I wish you happy trading from me and Clinton to you all. Please subscribe and help us so that we can bring you more quality videos. Okay, subscribe, comment, and like I said, if there is a market that you trade that we didn't actually analyze for you, just write the name under your comments. For instance, I would like you to look at maybe FTSE 100 for me, or New Zealand US dollar for me. So the following week, we'll look at it for you. We'll see you again. Bye-bye.